the closing beat, everybody. Happy Tuesday to you. Holiday shortened week. Hope you're having a good week there, getting ready for Thanksgiving and all that good stuff. We are financial advisors here at Jazz Wealth. Happy to help. We got a lot to go over here today. It's going to be a thankful episode, right? Like, what are we thankful for while I teach you stuff? We love teaching, and really, that's the key to anything. The more you learn, the better you can get at anything. So we're going to teach you some stuff here tonight. And while other advisors are playing checkers, we are playing chess. Helped a client bunch their deposits into a donor-advised fund so that they get the tax savings now and can donate to a cause that I happen to actually like as well in the future. But in the meantime, those dollars can grow. So we're essentially in getting this money all set up for them so they get tax benefit now, year-end tax planning there. They'll deal with that other stuff a little bit later in the future when they want to donate some of that money. By the way, we don't sell anything, right? So when I point out these things that we're doing, just for example, to let you know how we keep your dough straight, we don't profit from it. We don't actually do donor advised funds or anything. Just something a client asked, and we went through and really took care of it there. Our Wine and Wealth, of course, will be off this week. It is Thanksgiving on Thursday there, but if you want to, if you're a client, you can go back and look at last week's. It was a really good one. Year-end tax strategies from beginner to advanced. Had a lot of people asking me about the advanced ones there. I love it. Get you guys thinking a little bit there. But we're going to focus on the stock market here today. And we do have Puppy Cam set up. Ta-da! There he is, just sitting on the floor, minding his own business. Look at you doing your thing, man. I love it. Anyways, let's talk about the stock markets here. By the way, did anybody notice that the Congress just sort of kicked the can down the road? There's not going to be a government shutdown. Like, it wasn't even a big deal. So I guess, like, I'm thankful. We'll kick it off, right? I'm thankful for no government shutdown chaos there. Huh? You know, that's what it is. All right, let's take a look over here at the stock market. Interestingly, I think NVIDIA, I hadn't had a chance to really dive into their earnings. I believe the conference call is going on right now as we speak. The stock is down just a little bit. It was an earnings beat across the board from what I can see on the surface there. You just have to wonder, is it worth it? Remember, we talked about this yesterday. Everybody has a profit. So even if they beat and everything looks great and rosy, everybody has a profit. It gives them a reason to take some of those profits. So far, you see down just a little bit there over the after hours here. So not too bad. We'll see how that actually ends up playing out tomorrow. Nonetheless, let's go over to the S&P here. I am thankful for the S&P climbing out of, officially, correction territory. If you don't know, correction territory, just you'll see it in the news and stuff. When something, in particular, they usually focus on the indices, when the stock market, or in this case the S&P, falls 10%, that is considered a correction on a closing basis. So it can't just wiggle down there and pop back up. We did that by about a day and a half, actually. We actually managed to get that taken care of. Coming out of a correction territory means that we have that 10% rally off of lows. That's it. There's nothing else to it, really. But that's what you have. So we're officially out of correction, or as of yesterday, we're officially out of correction territory. The S&P is up 18% year to date, 4% just in the last 3 months. That accounts for erasing the majority of all of these those pullbacks there. We were positive going into it, so you got about a 4% gain in the last 3 months. Just think about that for a second. You have, what is it? About a 9.8% long-term gain in the stock market. You look back past World War II. Okay, we did 4% in 3 months there. It's pretty freaking impressive there. Now, if you look around the markets here today, healthcare was your leader. Remember, I said yesterday, don't count out healthcare, man. That's it, starting to get some more attention there. Your leading sector today. It's the third worst year to date, but over the last 5 days, it's the third best. You like your stats? There's a simple stat for you. The leaders, clearly, and by almost a mile, is going to be tech and communication services here. Both of them up about 50% year to date. I'd encourage you to use our research platform and actually look back. How often does a 50% gain, let's just say this is the last day of the year, how often does that translate into something really meaningful the year after? Right? Are you joining the momentum, or are you walking yourself potentially into a little bit of a pullback there? Both of them up about 50% year to date. Consumer discretionary comes in third place. I believe it's up about 30% year to date. Other than that, everybody else is playing catch up, man. I mean, there is a mile in between them there. If you look at the NASDAQ, a little bit of a pullback there. You might see more of that tomorrow. If NVIDIA does decide to pull back, that's fine. We talked about that through their earnings. The Russell 2000, I am I'm thankful that the Russell 2000 is at least attempting to pull back. These are some meaningful rallies off of the low after having about a 20% decline, not officially, right? So we have these really impressive dip buyers in an aggressive way, and I'm thankful that it's decided to pull back there just a little bit. It's only up about 2%, even that includes today. It's up about 2% year to date, which is essentially flat compared to the S&P, compared to definitely the NASDAQ there. You could just call it flat. So if you like that sort of thing, something to look at. I am thankful for the 10-year. The 10-year continuing to be under 5%. You know, that's a big number for comparing to the recent history here. We got 4.408 or something here today. So I'm thankful for that. We have interest rates falling, and that is helping a lot of these really beaten down areas, these beaten down dividend stocks, some of the beaten down tech stocks. There's not a lot of them, but some of those. Your utilities and real estate, even a tiny, tiny bit in the healthcare world, though that's not something you would normally correlate to. Gold. I am thankful for a golden cross. Should I be? Here's one of the lessons of the day. A golden cross is a technical pattern that, you know, people that follow this stuff like to follow. I just like to know about it. I don't necessarily believe in it. I like to know the stats. Sometimes they're great, sometimes they're not. A golden cross essentially just means that the 200-day moving average is rising. It just something. It's just going, there's no definition there. And that the 50-day is below the 200-day, but also rising. And the golden cross is when the 50-day, in this case the blue line, crosses above a rising red line, or the 200-day moving average. You can imagine, you give it a few more days, that's actually going to happen. So we thought, does that mean you should buy gold? Should we be putting a piece of that in there? We want to know if that's meaningful or not. Unfortunately, it is not. I will save you the banter. Here's your forward performance on an average basis, and it's ugly, man. There's not many positive periods inside of each of these. So for example, when you have the golden cross on a closing basis, the next week tends to be down by just about 1%, the next month down 1.52, 3 months 2.09, 6 months 2.22. It takes over 6 months for gold to really get back on track. And I would also point out, if you looked at all of these over the last 45 years and you looked to see which years were positive, there are very few. To make it really simple so that you can see, here is the percent of time that is positive over those time periods. In a 1 month time period, 33% of all occurrences were positive. You like that? I'm not thankful for those odds, right? That's a tough one there. You would never, ever, hey, invest in Jazz Wealth and I'll pay you a return. Maybe, but I'll give you 33% odds. There's a 33% chance that if you do, you buy shares of the company, for example, that you'll have a profit. The other 66.7% of the time, you're just going to lose. I'm sorry. It's just not going to work out. Would you do that? You wouldn't do that. Come on. Other than that, oil took basically an off day. Not much to talk about there. You do have oil inventory numbers coming out tomorrow. I don't know if they moved that. It will come out tomorrow. Yeah, so you got your inventory numbers coming out tomorrow. Could be a little bit of action there if you find yourself looking for something to do. I am also thankful for gas prices. Gas prices down here, officially down over 15%, down 54 days in a row. I wonder why. Oil, right? That's what we talked about. Oil being down there. It is normal, by the way, for this period of time in the year, they call it Labor Day to Turkey Day, right? It is very normal for this time of year for gas prices to pull back. It's a seasonal thing. The summertime travel season is over there, basically. Over the last 20 years, this year, we've not seen a pullback all but 6 times, right? So there are only 6 times where between Labor Day and Turkey Day, gas prices went up. It is very abnormal for gas prices to continue higher from Labor Day to Turkey Day, right? That's what the people use to talk about that. Nonetheless, we got a great pullback here, almost back to where we started at the beginning of the year. I mean, you know, you're traveling for Turkey Day, it's helpful. You know what I mean? All right, let's take a look at some of the stocks in the news, then I'll take your questions if you have any. Abercrombie & Fitch, which we happen to own and are very happy with this stock here. I thought this was interesting compared to the others that reported. They had a 16% increase in their store sales. We're not seeing that with the other retailers. These guys bucked the trend a little bit, and obviously that has been well known because it's moving higher. And I just want to throw it out there. Some of these people with their margins, pretty sick. You look at the, profit margin. You look at your gross profit margin and your net profit margin. You do that in your business, right? 64.9% gross margin. It's pretty impressive. And most of that is due to Hollister, those kids in their Hollister. $20, now probably more, $20 for the spray stuff. It don't cost that much. Come on. We know who makes it. They're also public. Anyways, Best Buy. Now, this is where we go back to the norm with what we're seeing in retail sales. Sales down about 7%. Okay. Weren't expecting that one there. They guided, meaning they projected forward and said sales are probably going to be lower going forward. We have a concern about the holiday season there. And their words, not mine, said the consumer habits are getting harder to predict and more uneven, especially in the big ticket items there. So a little bit of a down move for them. Kohl's also reported sales were down, which more than expected. They were down about 5.5%. And so the only interesting spot, Kohl's and Sephora, same thing. That killed it, right? Margins there were pretty good. Margins overall 38%. So not horrible. It's not the end of the world for them, but they fall into that same trap of what's going on elsewhere. Dick's Sporting Goods, a little bit different. These guys were like, hey, back to school. I don't know, did they sell backpacks? Back to school, buy the sporting equipment, cleats and the balls and the nets and stuff like that. Sales up 1.7%. It was expected, and the bar was set low, I'll give you that it was expected that sales would decline. They had actually factored in lower. So they had a positive return or positive growth in sales, obviously good with them. And they said, hey, back to school season was very, very strong. Other stocks in the news today, not a whole lot actually. Tomorrow, John Deere reports the focus will be on NVIDIA and whatever action that happens to, do. Tomorrow, slightly down after hours, and I'll maintain the same prediction that I had yesterday. Why would it skyrocket higher? How do you do that? Who hasn't bought that stock already that would cause it to go up that much further and become that much more overvalued? I don't know. Jazz After Dark, if you want to check it out from the other day, we did a fun study of the leading momentum or lack of momentum in the top 7 stocks, considering the top 7 stocks are leading the way this year. We said, is that normal? Took a look at all of that information for you. Okay, I'll pop out the questions here and take your questions. Otherwise, I got to get started getting ready. We are hosting Thanksgiving, apparently. And, it's that one time a year you got to clean your house and whatnot. So, I had to do that. Puppy cam, man. You saw a Cybertruck? The Cybertruck on the Ventura Freeway alongside Blue Pacific. Was that a thing? You like the Cybertruck? I think I do. When I first saw it, I was like, why would you do that? You could have sold an aggressive looking truck that was sort of like a remolded F-150 and you could have killed it. And maybe they will, I don't know. But you did that. And so I wasn't on board, but I keep seeing them. I see the black one that they've got there. I'm like, maybe. I don't know. J-Dub is here. Grateful is here. Dustin, how do you prepare for the day? What do you read? What do I read? Like a book? Or like, you mean probably what we're talking about. That's probably what you're talking about. Yeah, I'm with you now. Okay. This, one of those days. Just everything. So for me, a lot of these notes that I have, we already own the positions. I can't say often, like, oh, we're buying this or we're buying that. I think I'm allowed to say it once I've already done it, but there's some real strict rules there. So a lot of the news that happens individually with stocks, I've already seen it throughout the day because it had some impact on our portfolios or we want to add or whatever. So I don't have like a go-to. Sorry. Wish I had a good answer for you, but that's what it is there. Kevin's in Lakeland, man, getting ready for the holidays. I love it. I love it. I love it. I predicted that a lot of you are probably doing the same. There will likely not be a show tomorrow. If you're not familiar, we talked about this in the title there. This is the holiday volume. This is the holiday action, right? It seems that everybody has left a little bit early in the stock market. We just gapped down and then it was kind of like this all day. Nothing. Expect that to continue into tomorrow with the exception of your NVIDIAs and the tech sector and things like that. but expect there to be just like, hey, little action in the beginning, and then I'm out, I'm going. People leave. And the same on Friday. It's hard to get people back to the stock market on Fridays, and a lot of the trading desks actually are operating using their algorithms and or a skeleton crew. So something to consider there. Other than that, I will thank you for supporting us as you have, watching and paying attention and hopefully learning. I hope you all have a wonderful Thanksgiving there. And of course, if something really wild happens tomorrow, we'll make the time. I'll come around and do it. But other than that, have a happy Thanksgiving.